If you're a millennial or a Gen Zer, you probably hear this message over and over again. Buying a home just isn't affordable anymore. Home prices went up, interest rates went up, and unless you bought in 2012 with a time machine and a $2 latte, you're just out of luck. And honestly, I get why it feels that way. But today I kind of want to slow that narrative way down, because when you actually look at the data, a new story starts to emerge. Today we are going to talk about home affordability in 2026. I'm Megan Yarbrough with HomeSmart, and I'm your AZ real estate geek. Hi again, real estate geeks. Just a quick note on my sources because I know this matters. The income data that I'm going to refer to comes directly from the Federal Reserve's economic data, and I will link that below so you can check that out. And a lot of the housing data that I'm going to be using is coming from the Cromford Report. It is a service that I subscribe to. It is hyper-local, Arizona-only data. Not national averages, not some clickbait headlines, but what's actually happening here in the Phoenix metro area. Because real estate, especially when you're deciding if you're going to buy or sell your home, is very local. So according to the data, the median U.S. family income grew about 4.7% on average every year between 2014 and 2024. Project that forward a little bit, and the 2025-2026 median household income is going to be around $110,900 a year. At that income level, the median family household can afford an approximately $400,000 house using these standard lending practices. So if we stay a little bit on a national level, I just want to quickly mention that there was a Zillow article that came out recently that said that by the end of this year, 20 major metropolitan areas should see more affordability in homes by the end of this year. But what does that actually mean to you? Are home prices just magically going to drop? Are interest rates just going to drop and everything's just going to be easy peasy like we remember it being? If you want to look at more of an outlook on the next 60 to 90 days, check out this video here that I just did last week, just to kind of give you an idea of what the Phoenix area is looking like, getting closer to balance. So let's go ahead and zoom in locally as far as our median incomes. In Maricopa County specifically, median incomes kind of look like this. Married family households have a median income of $126,000 annually. General family households have a median income of $108,000 annually. Single income households have a median income of $91,000. And non-family households, so this is your apartment renters, your roommate situations, your retirees, have an annual median income of $59,000. What that means is a lot of households are closer to home ownership than they think they are. They just haven't run the numbers yet. So we're going back to feeling. The big emotional block that I am hearing over and over is, home prices are just too high. I'm too scared to buy. And listen, people who are saying that, they're not wrong. Prices are higher now than they were in 2020. Prices are higher now than they were in 2012. There is no argument there. But higher home prices doesn't necessarily mean that buying a home is a bad idea, especially if you are buying responsibly and planning to stay put for another 5-7 years. People still need to move. Life still happens. Families get bigger, families get smaller, a new job opportunity comes up, and historically, home ownership is still a good long-term investment. Not because you timed the market perfectly, but because you buy when it makes sense for you. Which brings me to one of my favorite lines: you live in your payment, not your purchase price. So as we're looking at all the prices of the homes going up, and we're thinking, oh, I can't afford that, we need to dial that back a little bit and go to what you can actually afford, which is why I'm making this video for you. Since early last year, mortgage rates on average have dropped more than 1%. And that may not sound like a lot, but 1% in a mortgage rate can mean 10% off of your actual mortgage payment. Even if prices haven't dropped dramatically, it means that home ownership is closer to people who are ready. So if you tried maybe early last year to get pre-approved for a mortgage and it just didn't look like it was going to be in the cards for you, some things have changed. You could try again and you'd see a totally different picture. Now, my very important caveat here. Pre-approval doesn't necessarily mean affordable. Just because a mortgage lender approves you for a certain amount doesn't mean that's something that you can afford on a monthly basis in real life. And the mortgage isn't the whole part of it. You have a PITI, so you have your principal, your interest, your taxes, and your home insurance, and an HOA or something like that too. So when I say you live in your payment, it includes all of that to equal a certain amount that you can afford on a monthly payment. When you go to get pre-approved for a loan, a lot of the times they look at your debt to income ratio. And that is how much debt you have outstanding. So if you have a car payment, if you have a student loan, and divide that over your gross income. And many times a lender might approve you for a loan for up to 40% of your debt to income. If you've recently been in a rental, an apartment situation, you know that they kind of look for that you can afford at least 30% of your income toward your rent. But I'm going to take that a step further. A good smart rule of thumb is called the 28-36 rule. You want to try your best to keep your housing payment, so again, your PITI, under 28%, and your total debt, so that's including any car loans or any outstanding debt that you have, under 36%. If you start going up to that 40% that you are approved for, that's when you become house poor. When you buy something just for the sake of buying something and then are miserable because you're just stuck there without any wiggle room. Sticking to the 28-36% rule is how you can buy a house and still sleep at night and have fun. You'll also want to research what kind of products are out there that are going to be best for you. Are you a veteran who has served our country or are serving our country and you have a VA benefit? Have you looked in FHA products that are fairly flexible and give you a lower down payment? Or do you need assistance with down payment? There are products for that as well. And since we're talking about down payments, historically, it is always good to be saving up to put a nice, hefty down payment down when you do buy a house. That's historically just how we did things prior to having these low down payment, no down payment products. The more you can put into your own home up front, the lower that monthly payment is going to be. And again, we live in our payment, not the purchase price. Being able to put down a 20% down payment, which sounds enormous, but if you have a plan and you have a goal, it's very doable. Not only will that reduce your monthly payment, make things a lot more comfortable for you on a month-to-month basis, but also lowers that payment by reducing mortgage insurance. And then pair that with seller concessions, which I mentioned in that one video. The seller does help you by providing a credit that can buy down your rate, even if it's on a temporary basis, just until you can get a little more comfortable with making that regular payment or just need a little extra cash at the time to be able to fix up your new place. So yes, the data shows that people can still buy homes right now. The real win isn't about qualifying or getting pre-approved. It is about buying in a way that fits your lifestyle. If your household income is over $100,000 and you just don't think that home ownership is realistic, I challenge you, just reach out. No pressure, just some clarity and some options for you. My contact information will be down in the description. And if you're super brand new to all of this and just have some questions or want more information, I am going to be launching a series of free first-time buyer workshops where we go over everything step by step and tailor the information to your specific situation. So you don't need a time machine. You just need good information and a solid plan. And I'd like to hear from you. So comment below. Do you actually have a goal to buy a home? And if so, what is keeping you from doing so right now? Thanks so much for spending some time with me today. And as always, stay geeky, my friends.